Hey, what's going on, everybody? John here. I do videos on investing, on generating income online on credit. You're going to see some videos on adventure travel, and you're going to see some videos. I'm starting to do more content on short and medium term furnished rentals that you would see on Airbnb and VRBO because I got three places here in Southern California that I do that for, and we are right in the thick of the busy season. So, what do we have today? We've got a very, very simple video. I'm going to talk about I'm going to kind of just show you a stack of what I found is the best margin rates for the online brokerages that are out there. And what I'll do is I'll put some links in the description area so you can actually go and um, you can go and sign up if you want to do that. But basically, why am I doing this? Well, the reality is that I do a lot of credit content. I also interact with a lot of folks that that have a lot of credit card debt, right? And then also their credit isn't the greatest. And the reality is that, I've been doing a lot of investing videos and I have a very deep background professionally in the investment world and also personally as well, because I've been a very good, investor personally. But the spirit of it is that what's interesting is when you invest with margin, a lot of gurus might say that it's not great to borrow from the bank or whatever, but you have to, think a little bit beyond that. And the reality is if I can get people, I shouldn't say I get, if people that have a lot of credit card debt and aren't that familiar with investing can start investing, and then they can access credit for interest rates that are, as low as or even lower than 30-year mortgages, then it is unquestionably an extremely, it is, extreme steps forward for them, right? Because if you take a look at what the rates are for credit cards, they're just, they're variable rates. They're really, really high. And even all the cash advances out there, it's just, well over 20% these people are paying. And then there's also the personal loans where those rates are high as well, not as high as credit cards, but sometimes, at least for people that don't have good credit, they can be, well over 10%, right? So the whole thing with margin is you can actually, not only are you borrow money at very, very attractive rates, some of them are like 2% with their margin rate, but also uh, these folks can actually, in most cases, they can access this credit line, this margin credit line with no DTI, so no debt to income requirement, and there's no Social Security pool. I mean, I can't say that there's none every time, but it's just not that likely that they do it. You open your account and then you just apply for it, and it's usually pretty easy to get it. So, I mean, I guess maybe sometimes they might do it, but most of the time they don't do a debt to income ratio calculation, and they don't actually pull your Social Security number. So for folks that, are having a hard time getting credit because they've already borrowed a lot and they're already paying high interest rates, it's a great opportunity for them to come in and start, get an account going and start investing. And then especially in the case of like M1 Finance or Robinhood, they've got very, very low margin rates. And if you just invest in something like an S&P 500 index fund, which, S&P 500 for the past 90 years has done between 9 and 10%. If you can achieve between 9 and 10%, and you're paying a margin rate of something like 2 to 5%, you're basically doubling and quadrupling, that interest charge. So they're actually ahead of the game, and they're starting to invest, and they could be growing some assets, and all around it's a great option. So I just want to show you a simple sheet here, really just some of the brokerage firms, and then what their respective margin rates are. And then what I'm doing is I'm coming out. I already have a blueprint. I talk about it, in some of my videos, like towards the end usually. But I already have a blueprint where I cover investing and generating income online, and then I cover a lot on credit. And at the very end, I've got there's a guide with like all the groups in the U.S. where you can get a free FICO score and the corresponding bureau. I'm gonna do a guide like that for investing, so that you can actually see the different groups that the online brokerage firms that actually do offer you margin, and then what their margin rates are for kind of varying asset levels, right? But let's take a look real quick, at this little guide here that I found. It's just really a website. It's not my personal guide yet. I am going to be coming out with a guide for it though. So let's take a look. So super simple. Again, it's basically just it's basically just right here. So we got, this is a good guide because it goes from 0 up to, 4,999, and then 5,000 to 10,000, 10,000 to 25,000, 25 to 50, 50 to 100, 100 plus, right? So you got M1. I guess you could do a plus, at M1 Finance, and then you get 2% margin, which is just spectacular. And then you got Robinhood, at 2.5%, certainly spectacular. Interactive Brokers at 2.59, M1 Finance, which is the non-plus, at 3.5%. Webull at 6.99. Then you got Ally at 7.75. Tastyworks at 8%, Fidelity 8.3, Charles Schwab 8.3, and then Charles Schwab goes down as your asset levels go up. Vanguard 8.5, Merrill Edge, I actually have a Merrill Edge account, it's in my corporation, 8.6, E-Trade 8.95, Wells Trade 9%, First Trade 9.25, TD Ameritrade 9.5, Trade Station 9.5, and then Sojo Trade 9.7. So obviously it's like, well, if this is something that would be appealing to you, the concept of getting some margin, M1 Finance and Robinhood would be, really outstanding choices, because you figure 2%. I mean, if you can earn that 9% from just simply putting it in an S&P 500 index fund. I actually have had assets in VOO, which is the Vanguard S&P 500 index fund, for years. And then I've had even a lot of success with, certainly over the last couple of years because of the bull run and the growth stocks, VOOG, which is VOOG. And that's done almost double of VOO, right? And has performed quite well, even with respect to some of the other growth stocks. Now, you're not going to get the whole, 80x like I've been able to experience with Netflix. You pretty much have to invest in the individual stocks to actually achieve that, right? But again, still, if you just go into like an index fund that's like the growth sector, of VOO, which is called VOOG, you can then outperform, that VOO index fund, at least I did with VOOG, with the growth, because it's been a very good couple of years with growth. Then there's also like ETFs for like solar, or if you wanted to do a clean energy, ETF, you could do those too. Anyway, my point is that, if you could do that, and again, SP 500 has achieved 9%, between 9 and 10% over the last 90 years. If you could do that, you're achieving, let's say 10% to make the math easier, and you're borrowing at 2%, you're still 8% of the head of the game, and you're borrowing money, at 2% with no DTI, and with no debt to income, requirement, and no Social Security check. So it's something that can really be great for folks that, have credit issues or are having trouble getting credit elsewhere, and then also, trying to maybe kind of put some of their credit card debt, onto their brokerage account, and it gets them going on investing. So it's really a great opportunity, and I wanted to kind of highlight, some of those margin rates for you right there. So hopefully you found that helpful. If you like that, if you want me to go out and find some more brokerage firms and show you what their margin rates are, let me know. You can just let me know in the comment section. If you want to know more about margin and what the respective asset requirement is to actually get margin at each account, let me know, and I can do a different video on that. If you want to hear more about that, just go ahead and let me know in the comment section. And also, I'm actually pretty excited. I just finished my basket of 40 stocks I have. I kind of, the spirit of it is that I'm putting together a basket of stocks which are super high growth stocks. Right now, in there, you're going to still see like Microsoft, right, and Google, because they still are growing. But the spirit of it is to really find the companies that are at about $1 billion in sales, and they're going to be going up to 10 billion, to 20 billion, to much higher sales. But nonetheless, I still have put together, and finalized my basket of 40 stocks, which is I call kind of the super high growth stocks. And I'm going to kind of pinpoint, really a couple in there. Let's say maybe 7 or 5 to 10 that are going to be, just the really super high turbo growth stocks that are my highest conviction names. I don't have those 5 to 10 figured out just yet, I kind of know what they are, but I don't have them. I haven't really, done the full selection process yet. But I do have that basket. If you want to see it, I'm going to put it in its own little investment blueprint that I don't have yet. But if you want to see those, just put it in the comment section and I'll shoot it over to you. So I'll put all my links below, everybody. The links I'm going to put in there are going to be the links to the brokerage firms that I highlighted there with the margin figures. And I'm also going to put some links in there with the existing blueprint that I have. The existing blueprint that I have is it's called the credit blueprint, but it's really also credit and accessing credit through investing with margin blueprint. It's like 65 pages and I have a lot of investing material in there, and then also some material on generating income online as well. And then there's a pretty extensive guide in the back, which is all the groups that give you a free credit score, and then also all the groups that give you a free FICO with the corresponding bureau, which you usually have to pay quite a bit of money each month to get all that FICO information. You can get the free FICO from Experian, just from the Experian mobile app. It's pretty easy, and then also just the Experian site. But the other two, which are Equifax and TransUnion, those aren't always easy to find. So I kind of have a guide for where you can get them for free, and then like which firm it is and which score it is and who it's available to. So, and again, this little blueprint is only $7, whereas again, you typically have to go and spend quite a bit of money each month to actually get those scores from a lot of places. So anyway, everybody, yeah. So a little background on me. I actually my first job out of college was Merrill Lynch. I did some investment banking after that. I also worked at Sun America here in Los Angeles for 3 years. I don't have an active Series 7 anymore. I'm not a financial advisor. I'm not your financial advisor, but I did have a Series 7 past that right away, and then that expired years ago after I left Sun America. But again, I'm not a financial advisor. But my personal investing, I actually do have an 80x return on my Netflix shares purchased 2011, 2012. I've got a 33x return on the Apple shares purchased before the first iPhone came out in June 2007. And then when you take a look at the when Amazon was trading at 3,600 and after hours, just when they released their earnings last month, I did have a 10x return on Amazon when I purchased those shares. Their shares were down almost $100 in one day back in 2014, and I started picking up some Amazon then, and certainly increased my exposure to them over the years. But those initial purchases actually got about a 10x return when you take a look at that 52-week high, which was after hours back in early May. Okay, everybody, if you have any questions, let me know in the comments area. Go ahead, and if you like this, if you like that value, if you want more value, hit the like button, go ahead and subscribe, and hit the notifications bell, and then also put in the comments area if you have any questions or you want to see more videos on margin and the respective accounts, or more online brokerage accounts and what their margin rates are. Okay, thank you.